So most traders are pretty good at spotting support and resistance levels on a price chart. That part's pretty easy. What proves very hard for most traders is figuring out whether to go long or short, exactly where to enter a trade, what stops to put on that trade, and when to take profits. But what if there was a way to make the same profit at any price between support and resistance? So all you'd need to do is pick the support and resistance levels, and if the market stays within those two levels, you win the same amount. In other words, you wouldn't need to be right on the stock's direction at all. You just need to be able to select a support and resistance level, as conservative as you want them, by the way, and if the market stays between those 2 points, you win the trade. If the idea of winning a trade, as long as it stays within a wide range up or down from the current stock price, then I'm pretty sure you're going to want to watch this video. The technique I'm about to teach you is utilized by some of the most successful professional options traders in the world, and yet the basic principles can be learned in a few minutes. So if you'd like to learn a reliable technique for making a profit as long as a stock's price remains inside a support and resistance range that you define, regardless of whether the stock's price goes up or down from its current level, then stick around and you'll see how. Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's options trading desk. SMB Capital is a proprietary trading firm located in Midtown Manhattan, and we provide capital for options and equity traders from all over the world, trading both remotely and right here in our offices in New York. You'll want to click our subscribe button right now so that you don't miss any of our free trading videos produced for the trading and investing community. Now in this video, we're going to be talking about an option strategy known as the Iron Condor and how you can utilize this strategy to create a wide range of prices over which you'll win the trade anywhere inside that range. If the idea of not having to care about a stock's direction and still winning the trade is of interest to you, we think this video will help. And if you'd like to learn 3 more real-world option strategies that our traders use, including the surprisingly simple and powerful strategy that some of the greatest investors in the world, like Warren Buffett, use all of the time, plus an options trading strategy that has a statistical 80% probability of profit month in and month out, plus an option strategy that you can employ with a stock that you like where you'll make your target profit whether the stock goes up, goes nowhere, or even goes down a small percentage, then you should check out the free options class that we're currently running. Just go ahead and click the link that should be appearing right now at the top corner of your screen. That'll open the free registration page in a new window, so don't worry, you won't lose this video. It's an extremely rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it. Okay, so let's jump into an example of this support and resistance concept. So this is a price chart of a real stock at its real prices. I'm intentionally not naming this stock because I don't want you to get hung up on this particular stock. I want you to learn the principles of this play so that you can then apply it to lots of different stocks, ETFs, commodities, or whatever you follow. So I think most people looking at this chart would agree that there's a pretty strong support at around the $1,000 level and that the resistance would be considered the 1270 area during this time period. Now, wouldn't it be cool if you could win the exact same amount of profit at any price between support and resistance? There absolutely is such a way, and it's achieved by executing a strategy known as the Iron Condor by options traders. So let's take a look at how it works. First, we want to pick an area that is a bit beyond support and resistance, just to give the market a little room to respond to that level. So in this case, we'll pick the 950 area, about 50 points below the strong support at 1,000, and the 1280 area, which is about 10 points above the area that we've designated as resistance. So now that we've established our trade parameters, 950 and 1280, we now put together a combination of options that will give us that uniform profit anywhere between 950 and 1280. In other words, we put a circle around the whole range between support and resistance and determine we want the same profit, which you're about to see is $2,000 of profit at any price in that 330 point range between 950 and 1280. Now, most of you probably know something about options, but just for a quick review, what's known as a call option on a stock entitles the buyer of that option to purchase 100 shares of that stock at a certain price called the strike price of that option, regardless of what price the stock is trading. A put option, on the other hand, entitles the buyer of that put to sell 100 shares of a stock he owns at the strike price of that put, again, regardless of what the stock is trading at. The buyer of the option pays what's called a premium to the seller of the option because the seller of the option is taking the risk that the stock will go past the strike price of the option, in which case the buyer can exercise his option. But if the stock on the expiration day of the option is not beyond the strike price of the option, then the seller just pockets the premium that he was given by the buyer. He walks away completely free of any obligations. The option, in other words, expires worthless because it was never triggered. Let's see how this idea of options expiring worthless comes into play when using the iron condor strategy. So here's what we call an iron condor that we've constructed around this stock trading at 10.25. So let's go through each option and see what's happening. On the bottom of the trade, we have sold 5 puts at 9.50, 60 days out from expiration, which in this case happens to be January. We got $22.65 for each options contract, which represents 100 shares. Since we sold 5 of these options contracts, we received $11,325 for selling 5 of those puts. Now, 20 points below that, we buy 5 9.30 puts as protection. So if the stock gets below 9.50 and we have to buy the shares at 9.50, we can sell them again at 9.30 and only take a small loss if the stock is really tanking. For that protection, we pay $18.70 times 100 times the 5 put contracts for a total of $9,385. Now let's turn our attention to the call side of the trade, the upper side. We've picked 12.80 as the top of our iron condor profit range. So we sell the 12.80 call for $1.33 times 100 shares that it represents times the 5 call options. In other words, we receive $665 for selling those 5 calls. And just as we did on the put side of the trade, we'll buy the 1300 call, 20 points above the 12.80, for protection in case the stock really starts running. That will limit our loss. The cost of that protection is $1.07 times 100 times the 5 options contracts. So for the protective call, we will have paid a total cost of $535. So the important point to keep in mind here is that come the day of expiration, at any price between 9.50 and 12.80, you pocket that $2,000 that you just collected. In other words, at any price between support and resistance, you win the same amount, $2,000. You'll understand why in a minute, but I want you to realize this point as we watch this example unfold. So now that we've entered the iron condor for the stock, let's move forward to expiration day, which is 60 days later. As you can see, the stock has rallied a bit to 10.98. So let's analyze what's happened with each of the options in the iron condor for you to understand this. The 9.80 put that we sold has no value because the stock is trading at 10.98. Who's going to exercise a put to sell their shares at 9.80 when the stock is trading 118 points higher? And the same logic applies to the 9.60 put. No one is going to exercise that, so it just expires. On the call side, the 12.80 call also expires without being exercised. Who's going to exercise the right to buy shares at 12.80 on a stock trading at 10.98? So that one also expires worthless, and for the same reason, the protective call at 1300 expires worthless as well. So all 4 options expired unexercised. Yet we've received $2,070 for the iron condor. So what happens to money that we received initially? We get to keep it. That's what happens. That's our profit for taking the risk that the stock would break support or exceed resistance during the life of the trade. So in this video, we learned about the power of a strategy known as the iron condor. We talked about how you can easily pick out a wide area of support and resistance that you can define and structure the winning trade around that. We show you how to make the same profit over a very wide, realistic price range through the use of this technique. Before watching this video, you may not have realized that there's another way to trade the markets where you don't have to be precise about the direction of a stock. All you need to do is pick a pretty wide range of realistic prices and then employ a strategy to capture profits at any of those price points, whether the stock goes up or down. And there's so much more to how options can be used to make it easier to trade the markets. We've really just scratched the surface today with the iron condor strategy. So if you'd like to learn 3 more real-world option strategies that our traders use, including this surprisingly simple and powerful strategy that some of the greatest investors in the world, like Warren Buffett, use all the time, plus an options trading strategy that has a statistical 80% probability of profit month in and month out, plus an option strategy that you can employ with a stock that you like where you'll make your target profit whether the stock goes up, goes nowhere, or even goes down a small percentage. Then you should check out the free options class that we're currently running. Just go ahead and click the link that should be appearing now at the top right corner of your screen. That will open the free registration page in a new window, so don't worry, you won't lose this video. It's an extremely rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it. So go ahead and click our subscribe button so you don't miss any of our trading videos produced for the trading and investing community. And while you're at it, please add your feedback in the comments section for what videos you'd like us to produce next, as well as what you found helpful from this video. So from all of us at SMB, trade well.